Charlie, I know you think rates are going to rise and inflation is going to pick up, but I guess inflation expectations have risen quite a lot in the last couple of months, and yet the 10-year gets close to 1%, pulls back again, and ending, in fact, below 0.9%. What level of inflation do we need to see to actually get rates to rise on the long end?
Great question. The numbers that came in this week were sort of in the 1.6 to 1.8 range for CPI. I think in March and April, we're going to get some very ugly inflation numbers because obviously we had downturn in prices last March and last April. So we're going to have a reopening. We're going to have the price of an airline ticket's going to be going up a lot. We're going to have rents firming. And I think we're going to have inflation numbers, hold me to this, I think they're going to be in the high 2s, maybe even 3%. And when we're staring at those kinds of numbers, which are going to be sustainable because of the $1 trillion deficits that we're running, then I think you're going to be starting to look at a 2% 10-year, not a 90 basis point 10-year.
So I want to get to Mark, but Charlie, I just want to follow up on that. I mean, it sounds like you are predicting a massive bond bubble that could be at risk for popping. And it's been, fixed income has been one of the safer asset classes, especially for individual investors who are nearing retirement. Do you think that is no longer the case? Do you think it's going to be a risky asset class in the next 12 months?
Absolutely. I couldn't have said it better myself. I mean, I remember when my grandfather was so happy with his 5.5% municipal bond portfolio in 1978 and then saw rates go to 11%. And what he thought was a safe portfolio ended up being worth 70 cents on the dollar. I think we're going to see something like that. We've got corporate interest rates below inflation, which has never happened before. We have got real bubble levels of interest rates. People haven't been reporting on this enough. The high yield market is now at bubble levels, and this is not going to end well.
Shepard Smith here. Thanks for watching CNBC on YouTube.